Financial Argument. Follow us on YouTube.
David Morgan with you with Money and Metals for the week of the 19th of June, Father's Day. And as an aside, Father's Day was actually started in Spokane, Washington. Very volatile markets across the board. What we're seeing, first of all, in the gold market is gold is testing the $1,300 level. Many have stated it's going to $1,450. I'm sure it's going well beyond $1,450. I'm just not certain of the exact time. Silver is a non-confirmation of the breakout of gold, which is what happened last time. So I'd like to see silver above the $18 level, but I don't want to spend too much time on the focus of where we're going short term in the gold and silver markets. Longer term, we're going far, far higher. I think that is a key element to bear in mind. On the economic news front, there are so many issues. I just basically want to hit some of the headlines and inform everyone that it's really time to probably step up your cautiousness toward the overall financial system. I am not a big fan of what's called a doom porn. I don't like the term, but it suits the situation. However, things are accelerating. I just finished listening to the Greg Hunter interview with Jim Sinclair and Bill Holter. And this was very, very interesting. A couple of quotes from them. I don't want to steal anybody's thunder. Mr. Sinclair made the comment that this financial situation that we are in dwarfs the tulip bulb mania and dwarfs the South Sea Island bubble. And of course I concur with that, and I've been saying for years that the biggest bubble of all is the debt bubble or the bond market or bond markets. In fact, I was actually taken off an interview on CNBC several years ago because they were trying to get me to say that gold was in a bubble when it had gone slightly past $1,000 per ounce. And I was emphatic that that was not even close to a bubble, and that the bond market was the biggest bubble. And as I started to get those words out, there were technical difficulties and I was cut off. I don't think I'll be asked on CNBC anytime in the near future. But moving on, I want to give you some headlines because I want you to really start thinking and digging in. If you're just watching this for infotainment, or it's something that you think is kind of cool, or it's nice to be informed, please dig a little deeper. Please get real. Buy real and be real. We are entering times, and it may manifest, I wish to say. It may manifest before the end of this year. And what's going on in the bond market, looking specifically at Deutsche Bank, is they have a chart pattern that's very similar to Lehman Brothers. They have way too much derivatives exposure. As Jim Sinclair said, they're basically out of the club, which means that it looks like their failure is going to be, I won't say imminent, but probably fairly soon. So some other information, just headlines that are key to your thinking process and where we are in this global financial morass. Number one, stock markets crash of 2016. Stocks have already crashed in 6 of the world's largest 8 economies. So that's something to bear in mind. Global negative bond yield. Swiss 30-year bond yield dips into sub-zero territory. And again, coming back to the Greg Hunter interview, as it was pointed out, when you now invest in a bond at negative interest rate, what you're really saying is that it's safer to buy debt than it is to hold cash, which is absolutely 100% completely absurd. The safest thing next to gold is cash. So you really look at the situation to buy a bond with a negative yield, thinking that that is something that is worthwhile, is absolute, total, complete insanity. And yet, that is where the financial markets are in several instances. On the Canadian housing market, it is a big bubble, a very big bubble, and is going to end in tears. Sorry to my friends in Canada. I know many of you, but especially the Vancouver area. And there are bubbles. And one of them, of course, is the huge bond bubble, as I said, and this other one is Canadian real estate market. U.S. officials fear a Saudi collapse if the new prince fails. Quite a headline. I think you should investigate that. So there's been another mega hack, this one affecting 45 million accounts from 1,000 websites. And Japan, with my friend Tres Kipna, talking about short Japanese debt. a headline here that Japan, a future of stagnation. Well, I think it's going to be a lot worse than stagnation. Japan doubles down on coal power as trading houses curb investment. China's debt is 250% of GDP. And here in the US of A, New York State Senator introduces unconstitutional anti-free speech legislation. And I think I'll wrap up with this because I want to emphasize the debt markets and the bonds. But charting the lowest interest rates in 5,000 years and the worst commodity returns in 80 years. Another headline not from the mainstream press. So that's going to wrap it up. I do want to encourage everybody to go to the Morgan Report website. I'll be doing a webinar in about a week on a Saturday on a weekend so more people can attend. And I'll be talking about where the precious metals are going. As many of you know, I have stated for a long time that the biggest move comes in the last 10% of the time. I'm going to go back in history and prove to you that's what took place last time, which means there is no guarantee it will take place this time. But as Jim Sinclair said, again, what's taking place or will take place when the reset finally gets here, and it may not be that far off now, it will be into the financial record books. I've said that myself many, many times. And Jim went on to say that it will be to our children's children's children that will be talking about it. It is that big an event. I don't really want to sell fear. There are ways to protect yourself. Gold and silver are obviously a couple. But more important, I think, than just having your financial house in order is having your own personal house in order, which means it's about your attitude. Your attitude that no matter what the world throws at me, I'm willing to face it squarely, accurately, and move through it. Because these are going to be trying times, not only from the aspect of the financial markets, which is just part of our lives. It will be trying times for many aspects of our lives. So again, get the right attitude, and I'll be with you in the not too distant future.
We're going to do a Wall Street View with David Morgan of the Morgan Report. It's a newsletter. David, welcome back to SNN Live.
Well, thank you, Shaw. It's great to be with you.
It's good to have you. David, the Growth Capital Expo is for micro-cap companies, investors, sponsors, etc. You were the speaker at the lunch, one of the lunches, and you had a ballroom of investor types. What did you speak on?
Well, I spoke on the relevance of precious metals in today's investing environment and why they're still important.
So I was in that audience, by the way, and I noticed that you brought out charts, you brought out information, you had historical data, and there were some really interesting facts. Let's speak to some of that.
Well, first of all, the first thing I put up was a quote from Richard Hemphill from the Federal Reserve Board. He's now deceased, and he talked and said in this quote that the most important thing that thoughtful people can think about is the monetary system. And if some of these problems are not resolved, that we could be facing a financial collapse and that something should be done about it. And that's from the Fed itself. So I bring that up because most people don't even know of that quote. And it's very pertinent to the fiat finance system that we now exist in. And I explain that a collapse doesn't mean things change as far as wealth going away. All the wealth stays in place. So it's not a destruction of wealth at all. It's a reallocation of who owns it. So I addressed that, and then I went on and did some drilling down in the financial system, specifically in the precious metals and how they're an important factor in asset allocation.
So I remember when I invited you to come and speak at the lunch, I said, now the Silver Guru's coming. And, it was funny because, sometimes you have a full room of investment bankers and investors. Not everybody's into precious metals. Not everybody's aware of what's going on. And I think it was very informative that you came and spoke to the audience. And I think you lit a few fires in some people's minds about how they should allocate their investment dollars. Could you speak to that?
Yes, well, first, thank you. The first thing I did was thank you and your family. Shelley's our class act, and it was very much an honor to be able to speak here. And these are people that have the entrepreneur mindset, which I very much admire. And I went through, as you said, why this asset allocation is important. I think that I did set some fires because later on I had about three people over time come up to me and said, effectively, wow, I didn't know. And it is important. And, can I get some more information, which I was happy to do for them.
So you talked about gold, silver, platinum. What are some of those relationships to the current status in the market?
Well, platinum right now is primarily, it's really not a monetary metal. I mean, classically it is, but in practical terms it's not. And it's basically based on the auto industry. And of course, as I said during the speech, the BDI, the Baltic Dry Index, the shipping availability is huge because there's no ships, but very few traveling the oceans. In other words, trade has come to a very slow sputter relative to what it was during the heydays of the early 2000s. So this is something you have to factor in your thinking. On top of that, we have to look at where are we going as a globe, as a planet, as a nation state. What's the long-term perspective, and what do we really want to achieve? And I think it's beholden on the millennials to basically take over kind of a financial mess that we're leaving them. One of my biggest aims throughout my life has been to bring this message to more and more people so that better understanding can be held by all. Because in order to correct a problem, you first have to understand the problem. And so I want to be as succinct and clear as possible so that there's no doubt in anybody's mind that this problem really exists. So I basically end with, be real, buy real, and get real, because this is the kind of value, and I spoke about value, not only value in like equities or value in a startup company or value building or building value relationships, but the real value that people have internally, and how that was the founding principles that made this country so great and how far we have gone from there. And I gave the analogy that there's a direct correlation between the debasement of the currency and the debasement of the moral structure of a society. And that seemed to really get a lot of thinking going in the audience because, as I said before, several people came up and had quite a few words for me after my speech.
Let's talk about the Morgan Report. What is it? What do you do with it? Who can use it, etc.?
Well, first off, it's not for everybody, but for a sophisticated investor, it's quite useful. I'm one of the few analysts that does both the commodity side and the equity side. Most newsletters do the equity side only, and most newsletters get into what I call story stocks. They're not really balanced, in my view, between top tier, mid tier, and junior equities or small caps, which I do, but that's not what I do all the time. And I allocate the model where big money goes into big companies, mid money goes into mid companies, and the speculations are a lot of fun. I mean, who doesn't want to buy Silver Standard at 65 cents and watch it go to 40 bucks? Who doesn't want to buy General Molly at 35 cents and watch it go to 12 bucks? I mean, these are the kind of things that we've done, but it's not the focus. The focus is really on how to make as much money as possible with the lowest risk possible. And that's a balancing act, which means you need to do what I've learned the hard way. I've been doing it for years now, but that is one, time in the market, two, understanding the silver market and other commodities, because Morgan Report looks at everything of value. We look at real assets. Lithium is hot right now, and I've spoken to a couple of lithium companies that you brought here, and thank you for that. Looked at the energy sector. We looked at geothermal. In fact, I met with geothermal, and I've already done a deep drill down, excuse the pun, into that company once before for our mastermind clients. So there was some more synergy here with me than I actually expected coming into your show. So anyway, back on point. What we do is look at the commodity side, the timing side, the equity side. We also look at the trades that I do. You get to look over my shoulder. I guarantee anyone that writes us will get an answer to their question. And we take a film crew with us on any mining trip that we do, so you get to look with us. That's like a $2,500 value. How many newsletters do that? None to my knowledge. And we also have a web, not a web bot, but a web, widget that we designed specifically for our subscribers. So if I make an update or an alert, it pops onto your screen and you know there's an update or alert you need to pay attention to. So we've got a lot going for the money. I mean, the value total is probably in the $8,000 range. If you compare what a good commodity letter would cost you, $2,000, what a good equity letter from Wall Street would cost you probably $1,500. Taking a mining trip, $2,500. A timing service, probably another $1,500. You add it all up, and I give that all for $500 a year. So I have people that are, been long-time subscribers and are pretty happy with the Morgan Report.
Now, David, your website.
It's themorganreport.com.
Ladies and gentlemen, the David Morgan from The Morgan Report, the Silver Guru, and the newsletter. I'm Shelley Kraft. This is SNN Live, and this Wall Street View came at the Growth Capital Expo, Caesars Palace, Las Vegas 2016. Thanks for coming on.
Thank you.